Hello, it's Big Chads, and this is the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. You can find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about something called Renko candlesticks. You've probably seen it and wondered what it is. Now, I've already done videos on other types of candlestick bar chart. I've done it on the Heikin-Ashi, and this is on Renko. And here's just a AI overview. Go ahead and pause and read this on your own. Here's an image of what it might look like. Now, this one has ATR, which is average true range. There's a couple different inputs. You can do a traditional, which is a dollar amount, and I'll show you that, or ATR, which is essentially a measure of volatility. Now, if you remember, we have also done a video on point and figure charts. And with point and figure charts, the time isn't, it's not like there's this candle this day and then there's this candle the next day. You only get a new candle after a certain amount of price movement or dollar movement has happened with point and figure. Same with Renko. So what I'm going to do here, I have the Bitcoin chart with traditional, which means like a dollar amount, and 1,000. And that basically means every time it goes up $1,000 on a closing basis, you get a new candle. If it goes down $1,000 on a closing basis, you get a new red candle, right? So let me go ahead and show you the settings so you can understand what this is. It might be super confusing. What am I talking about? Okay, so source is candle close and traditional. Now you can do ATR, average true range, which I believe is the default. But let's change it, and you can customize this. It's a trend following system, and the point of it, we'll go to 5,000. And the point of it is, it just gives you a sense of the broader trend, but it's really hard to maybe use trading signals. You're not doing inside bars, you're not doing, breaks of structure. Maybe you are, and you can see if the system works for you, but this is Renko. So every time you close $5,000 higher than the prior close, you get a green candle. Here, you get $5,000 lower, a red candle. You generally trend. You normally don't do this chopping around. Sometimes you get a little chopping here as the trend is changing around on $5,000. It shows us that. But generally, you're going to get a certain number of bars or candles in a row. Uptrend, downtrend, uptrend, downtrend, uptrend, choppy, a little bit of chop, and then an uptrend, right? So Renko, again, you can pause and read this to get a sense of what is he talking about. These are called bricks. These are called candlesticks, but they're really just bricks. And again, it's not based on the time. It's not like, well, what was the October candle? Because if it doesn't move, in this case, $5,000 on a candle closing basis, there's no candle that's printed. You're going to have the same candle. So Renko is another Japanese candlestick way where you're looking for a trend strengthening or a trend weakening. It's highly customizable. Again, you can use average true range or traditional, as I have here. Play around with it, see what works for you, and kind of go with it and see if it's something you'd like to add to your arsenal. But now you have just a general idea of what a Renko candlestick is. And this is for the Trading Encyclopedia Daily Education playlist on my YouTube at Chads Trading. Find me on Twitter at Big Chads and Bitcoin Live, where I'm a founding analyst. Folks, thank you so much, and I'll talk to you soon. Big Chads out.